Sir Keir Starmer has declined to rule out tax rises this autumn after a major think tank warned that Britain faces a £50 billion hole in the public finances, questioned by broadcasters. The Prime Minister declined to say whether the government would increase VAT, income tax or corporation tax in the budget. It comes after experts from the National Institute of Economic and Social Research warned that slowing economic growth, a weak jobs market, and the cost of labour U-turns on welfare spending had combined to plunge government finances deeper into the red, the think tank said. Rachel Reeves, the Chancellor, speaking on a visit to Milton Keynes, Sir Keir declined to say explicitly whether the government was still committed to not raising VAT, income tax and corporation tax in the budget. In the autumn, we'll get the full forecast and obviously set out our budget, he said. The focus will be living standards, so that we will build on what we've done in the first year of this government. We've stabilised the economy. That means interest rates have been cut now for times. For anybody watching this on a mortgage, that makes a huge difference on a monthly basis to how much they pay. Asked whether he disagreed with economists warning tax rises in the budget would be necessary to raise revenue, the Prime Minister said, "Some of the figures that are being put out are not figures that I recognise." David Aikman, the director of the National Institute of Economic and Social Research, said it was increasingly difficult for Ms. Reeves to avoid raising taxes on working people if she wanted to maintain her fiscal rules and stick to spending promises. The forecasts will worry Downing Street. Given the Institute's stature, it is Britain's oldest independent economic think tank and was co-founded by John Maynard Keynes, the British economist who has helped to shape modern left-wing thought. Its economic model is highly respected globally and used by organisations such as the Treasury and the International Monetary Fund. Sir Paul Tucker, its president, is a former Deputy Governor of the Bank of England.